In this video, you will find tips on how to invest in the stock market with your investments and what are the factors that influence its price. Investing in the stock market can be a profitable way to grow your money, but it can be complicated. If you are unsure where to start, this guide will help you with the basics of investing. There are several reasons why people choose to invest in stocks instead of conventional bank savings accounts. This is because there are certain advantages associated with investing in stocks, including avoiding unnecessary taxes and fees saved by using retirement accounts or trading online instead of at banks, such as commission fees and hidden fees like bank account maintenance fees. Time and time again, the stock market proves to be a great investment choice. Given that stocks are a form of ownership in companies by investing in them, it is an attractive way to get returns on your money. While it may be tempting to jump into the market right away, you should consider some fundamentals before getting started with your study. The stock market is one of the most successful investment opportunities that anyone can avail. Trading in the stock market is easy, whether you have small amount or large sum of money. Investing in stocks has become a common practice for many with small or large amounts of savings. But investing wisely is not always easy. In this article, we will answer some common questions on how to invest in stock market and also introduce best practices for being a successful investor. In the stock market, there is a lot of risk involved. There are numerous stocks and factors that you should consider before investing in a certain stock. The most important factor to consider before making any investment is the value of your investment. The potential return on your investment and potential risk in your investment should be weighed against each other. This is crucial for investors because it helps them understand the risks as well as opportunities that they may have if they invest in certain stocks. Individuals worldwide are figuring out that putting money in stocks can be a good investment, but only a few know what they are getting themselves into. Many people haphazardly invest money and unfortunately see no positive results. When you decide upon a stock to invest in, don't allocate more than 10% of your portfolio into that company. By doing this, you won't lose huge losses if the stock suddenly going into rapid decline. It is important to constantly reevaluate your portfolio and investment decisions every few times a year. This is important because the economy and industries. Some sectors may start to outperform other sectors, while others will do well. The best financial instruments to invest in is likely to change from year to year. You must watch your portfolio and make changes as necessary. Don't try to make money too fast and time the markets. History has shown the best results go to those who steadily invest equal sums of money into the stock market over a greater period of time. Figure out how much you can afford to invest. Then, make a habit of investing regularly, and stick with it. If you desire the best of both worlds, consider working with one that will offer you both options. This way you'll be able to dedicate part of your stocks to a professional and still handle part of it yourself. This division allows you the help of having two people working towards your goals. If you are new to the stock market, realize success isn't immediate. It takes time to develop a strategy, choose the right stocks and make your investments, so they give up too soon. Patience is key when it comes to the market. Short selling can try. This involves making use of stock from your broker. The investor will then sell the shares at a later time once the price of the stock drops. Know your capabilities and skills and stay somewhat within them. If you are going to invest without help or using an online broker, invest in the companies you are familiar with. You may have excellent insight about a landlord business's future, but do you really know much about companies that make oil rigs? Leave those investment decisions to an expert advisor. The strategies in your plan should be about when you will buy and when to sell. This should include clearly defined within it so that you invest only funds that are available. This will ensure that your decisions are based more on logic than on emotions. Keep your plan simple if you are just starting out. It is smart to prepare yourself for entering the market by reading up on many different investment strategies, but if you're new in investing, it is good to focus on one thing that truly works and stick to it. You will end up saving a lot of money this way. Don't overinvest in the stock too heavily. Supporting your company is one thing, but be sure to only do so in small amounts. If the company does poorly or even goes out of business, you could experience a significant financial loss and have very negative feelings toward your employer. Damaged stocks are good, but stay away from damaged companies. A downturn in a stock can be a buying opportunity, but just be sure that it is a temporary downturn and not a new downward trend. When companies miss key deadlines or make errors, you know it's the perfect time to invest. Even if you decide to select and trade stocks on your own, it is best to consult a financial advisor. A good professional will do more than tell you which stocks to choose. They will sit you down and look at your financial goals and what your risk tolerance is. You can create and manage a solid plan that works great for you. The article here should have presented you with greater knowledge of the stock market. You can start investing and make a substantial profit. Always remember that in order to gain success, some amount of risks must be taken, so make sure you gain as much knowledge to limit the risk as best you can.